Okay, so the world is changing fast. And for investors, trying to figure out what 2026 is going to look like can feel, well, a little chaotic. That's why today, we're digging into HSBC's latest investment outlook. We're going to see how they suggest building a resilient portfolio for what's coming next.
You know, when you look at the global economy right now, it's pretty clear the old roadmaps don't really work anymore. It's this mix of huge risks and, honestly, incredible opportunities. So, what's the play? Well, HSBC has put together a guide for this exact moment. Let's dive in and see what they're saying.
So, let's start with the big picture. How does HSBC even describe what's happening right now? Well, they've got this great metaphor that I think really nails the vibe of today's economy.
A busy building site. I mean, that's perfect, right? Just think about it. You've got the massive, and I mean massive, build-out for AI. Data centers are popping up everywhere, and there's this huge push to bring manufacturing back home. It's noisy, it's messy, it's chaotic, but man, is it energetic. The future isn't some far-off thing. It's being constructed right in front of our eyes. Okay, so if the world's a giant construction zone, how do you invest in it without getting run over? What's the actual game plan? HSBC boils it down to a super clear 4-point strategy for 2026.
All right, here they are. First, look across and beyond just AI. Second, be ready to manage the market dips. Third, unleash the power of income. And fourth, capture the massive opportunity in Asia. Now, these 4 priorities, they don't just come out of nowhere. They're built on top of 2 huge economic forces that HSBC says are driving everything. So let's look at those first.
The first big driver, and this is a big one, is something that, let's be honest, a lot of experts have been wrong about for a while now, and that is the incredible and often underestimated resilience of the U.S. economy.
We've heard it a million times, right? The #1 rule in investing for decades has been super simple: don't fight the Fed. Whatever the Federal Reserve does, you just don't bet against it. But things might be changing.
So, HSBC is proposing a new rule for the playbook. For 2026, it's this: don't underestimate the resilience of the U.S. economy. Why? Because you've got this powerful combination of consumers who just keep spending and this absolute tidal wave of investment into AI. And that strength, which so many people missed, is really the foundation for their whole outlook.
And this right here, this is a really important point about the quality of what's driving the markets. In the U.S., the market is going up because companies are actually making more money. Simple as that. Real earnings are growing. Over in Europe, a big part of the growth has come from something called multiple expansion. All that means is that investors are just willing to pay a higher price for the same amount of earnings. It's a huge difference, and it tells you a lot about the real, fundamental health of the U.S. market right now.
So, the big question is always, is the U.S. market in a bubble? Are these high prices just hype? Well, this chart gives us a pretty clear answer. No. Look at the return on equity. Basically, how much profit a company makes for every dollar of shareholder investment. U.S. and especially tech firms are just in another league. They're wildly profitable. So these high valuations, they're not just wishful thinking. They're being propped up by some of the most efficient, money-making companies on the planet.
Okay, so that's pillar #1, a surprisingly strong U.S. Now, let's pivot to the second massive force that's shaping this 2026 outlook, and that is the absolutely incredible growth story happening over in Asia.
Look, Asia isn't just a supporting character in the global economy anymore. It's a main engine of growth. And the AI revolution, it's like pouring jet fuel on the fire. It's supercharging absolutely everything over there, from building new infrastructure to sparking new innovations.
And the numbers here are just wild. Let's run through a few. First up, data center capacity. We're talking about the actual physical buildings that power AI. Asia is set to grow at over 13% a year. That pace just blows North America and Europe out of the water. Then you've got this. China's AI cloud market. It surged by 122%. I mean, it more than doubled in just the first half of last year. That's not a slow and steady change. That is an all-out, full-speed sprint into AI.
And what does all this growth mean for investors? Well, look at Japan, a 220% jump in companies buying back their own stock. That's a huge signal that companies are getting serious about returning cash to shareholders. It's not just about growth for growth's sake, it's about creating real value.
And this chart really just sums up that whole story. When you look out to 2030, Asia-Pacific isn't just competing, it's set to dominate data center capacity.
They are literally building the foundation of the future, and they're doing it faster than anyone else.
But here's the kicker. The story in Asia isn't just about some far-off future growth. It's also about getting paid today. Just look at the dividend yields in places like Singapore and Hong Kong. They are crushing the US and global averages. So you get this incredible 1-2 punch, massive growth potential, and strong income right now.
Okay, so we have these two massive engines firing on all cylinders, a resilient US and a supercharged Asia. So the question is, how do we actually translate that into an investment portfolio? Well, it brings us right back to those 4 priorities we mentioned at the start.
And this table really lays it all out nice and simple. To tap into that US resilience, you don't just buy the big AI names. You look at the sectors that support them, like utilities and financials. To handle the inevitable market dips, you use alternatives like gold. For income, you focus on high-quality bonds. And of course, to ride that Asian growth wave, you overweight the key markets there that give you both innovation and income. See how it all connects? It's a really clear, logical plan based on everything we've just talked about.
So that really leaves us with one final and I think really important question to ask ourselves. We're living in a world that is literally being rebuilt by AI and economically rebalanced by Asia. So you have to ask, is your portfolio designed for that future, or is it still stuck in the past?